Chairwoman Waters, Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009. That was not a good time to be looking for a job. From 2010 to 2017, I worked at a few startup companies, but there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing. In April 2019, after nearly 2 years unemployed, I accepted a marketing and financial education job at MassMutual. My wife Caroline and I were thrilled that I had an income and benefits. My job was to help develop financial education classes that advisors could present to prospective clients. I was not a stockbroker or a financial advisor. I did not talk to clients, and I did not recommend stocks for them to buy. Before and after I joined MassMutual, I studied and followed stocks. One of those was GameStop. In early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis. 2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop. Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business. By embracing the digital economy, GameStop may be able to find new revenue streams that vastly exceed the value of its business. I am hardly the only person who has advocated these points. When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
Mr. Gill, but I understand that you made your position known on GameStop as far back as 2019 and are lauded as a diamond hands hero by Wall Street Bets community. Have you ever previously experienced or observed the type of restrictions Robinhood and other applications performed on January 28th?
Thank you, Congressman. No, I have not.
Thank you.
But we need to have some of these fundamental and important questions answered at the end of the day. And one of the assertions that you've heard already today is that investing is, quote, casino gambling. It's using monopoly funny money. I guess I want to know, is individual retail participation in the marketplace gambling, casino gambling, or using funny money? Mr. Gill, why don't we just start with you? Very quickly. I don't hear him. Mr. Huffman, let's move to you.
No, I believe that investing is investing.
Okay. Mr. Griffin?
I believe the vast majority of retail participation are people saving to meet their dreams.
All right. Mr. Tanev?
Congressman, thank you. As I mentioned in my opening statement, Robinhood customers have essentially made over $35 billion in unrealized and realized gains on all of their assets.
It's thing for them, correct?
Absolutely, it's investing and it's building wealth.
Go back to Mr. Gill.
Yes, of course. I do. I believe it's an opportunity for investors to participate in the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock? And
for me personally, yes, I do find it's an attractive investment at this price point.
Quick question. Did you invest in GameStop because you were not aware of the payment for order flow? That's one of the accusations. People bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay. I think that answers it. I believe my time has expired.
Questions, Mr. Gill. I represent the 8th Congressional District, which includes Brockton, Massachusetts, your home. So I figure I more than anyone owe you the opportunity to respond. But you earlier said that that you began your trading in GameStop when it was around $5 a share, with the hope that it might go to 20 or 25. And I want to say I accept your analysis, your initial analysis that GameStop was undervalued, and I think your belief was sincere, and I think it was fact-based. And in your defense, we are talking about GameStop, right? It's a shopping mall retailer. We all know it. It's a well-known commodity. But at some point, the stock really takes off, right? It goes from $5 to $100 to $200 to $300. It gains escape velocity, as they say, and it ends up almost $500 a share. So we're still in the midst of a pandemic, right? And you can land a jumbo jet in the parking lot of the Westgate Mall in Brockton or any major mall in America, right? So no one's going to the malls. Nobody's feeding this company. And so it's up around $400, $500. Is there a role for someone to play here, for you to play, or the SEC or Robinhood to say, okay, the price dislocation has become detached from reality, and a note of caution might be given to other day traders and individuals, retail traders who might get jammed if they get into this trade. From your perspective, I mean, you've got a unique perspective. What do you think is the proper thing that should have happened? At some point, this thing got away from you and went totally into the stratosphere. And I'm just wondering what your thoughts are on how this should have worked.
Thank you, Congressman Lynch. I do know Westgate Mall quite well. I would say that, just to be clear, I had thought that maybe roughly $20 or $25 per share. I had thought that at that time, but investment theses, they evolve over time. As the fundamental events change over time, it's important to update theses accordingly. And I had mentioned that it appeared as though the stock price had got a little bit ahead of itself last month. But there's a lot outstanding. There's a lot that has happened in recent months to suggest that GameStop could indeed turn around its business significantly. And one big element of that is indeed one of the largest investors in GameStop, Brian Cohen, and he has brought in some colleagues that could help him turn around this company.
The public thinks that there was collusion, that the big guys, all of you guys, were figuring out how to do this and ultimately come out ahead, as you always do. And it seems my colleagues on the other side want to help people. Now, Mr. Griffin, if I could just ask you the first question, how many people are in the room with you? You could just count how many people are in the room with you.
There are 5 people, including myself, in this room, sir, Congressman.
Thank you. So I don't think my colleagues need to help the CEOs or anybody else. They got plenty of help.
Mr. Gill, as was previously noted at this hearing, one of your colleagues at the witness table has as many as 5 people in the room with him. I guess, Mr. Gill, my first question for you is, how many people are in the room with you right now?
0, Congressman.
Gone? Right. That's what I thought, Mr. Gill. And I just want to note for the entire committee that Mr. Gill is actually appearing before our panel by himself, while many others are receiving significant, obviously underestimating the sophistication and the independence of these individual investors. Now, we've heard a lot of reasons for concern today. Some are legitimate, but also some proposed overreactions by members of Congress that could create even more problems. Attention has been given to the positive sides of this story. Others temporarily limiting its investors from trading, which deserves an investigation. What we saw was a movement of individuals investing to try to make money. I don't see what's wrong with that, even if that motivation is fueled by a desire to stick it to a hedge fund they don't like. Mr. Gill, you're the only retail investor involved in this GameStop situation on our panel today. Why, I don't know, but you are. Yet members on the committee have hardly asked you any questions. We've heard from a lot of the companies and funds involved in this event, but we've barely heard from the people that made this happen. Is there anything you would like to add to this hearing that you haven't been able to add yet, given that we're past the 4-hour mark on this hearing?
I appreciate that, Congressman. I do. I don't have anything to add at this time, just that I would be the first to acknowledge that investing in stocks and options is incredibly risky, and it's so important for people to do their own thorough research before investing. But that said, I tend to agree with you that folks should be able to freely express their views on a stock, and they should be able to buy or not buy a stock based on those views that they may have.
Mr. Gill, on that note, so how would you feel if these brilliant people that are asking you these questions today decided that you should not take the risks that you're making these thoughtful decisions on? What do you think about that?
I would probably ask for an explanation, Congressman, and to try to understand their viewpoint as to why they might think that, and perhaps we'd be able to talk through it.
Right. I appreciate it, Mr. Gill. I think we need to value the right of the individual to make decisions for themselves. And it's fantastic to see so many people getting involved and participating in the greatest financial markets in the world. We should be encouraging individual participation in the market by you and others. And we should want more people, more, not less. We don't need the people from the mountaintop deciding who's capable and who's incapable. We need more people having the opportunity to develop financial literacy, to build their own portfolios, to secure a safe and comfortable retirement, to grow their wealth so they can send their kids to college. And most importantly, in my opinion, we should strive for individuals to have the autonomy to do all that they themselves would want to do without having to rely on others or, God forbid, their government.